Well, thank you everyone for joining us for this month's Association Essential Series. We're talking about insurance, and we're going to go ahead and get started. My name is Scott Anderson. I am the Vice President of Community Management for PCAM, one of the HOA living companies. We also have Luke Udy here, who is an insurance professional and one of our trusted business partners. And we will introduce him a little bit later in our program. But to get us started, just a couple of announcements that since our last presentation. As always, if you have missed one of our sessions, you can visit and see our old recordings. You can go to hoaliving.com. Click on Training Association Essential Series and previous recordings to get caught up on any of the topics that we've talked about in past, whether it's building community, talking about governing documents, or reviewing some of the information from last year's. Here is the upcoming schedule of classes or content that we'll be producing over the next several months. We are making a slight change on our May presentation to talk about resolutions for your community association. We'll be talking about some key resolutions for the governance of your HOA and why they're so important and how to help them, how to get those passed for your HOA. Those coincide with some efforts that we are producing here in the office and some initiatives here for our office and our managers. So look forward to that. Also, exciting news on April 12th, HOA Living turned 23. We were established in 1999. Here's a few little facts. Again, we're the only accredited association management company in Utah and Idaho. We have 7 of the 9 PCAMs of Utah's 9 PCAMs work for HOA Living companies. We have 9 offices and 131 employees and 500 plus associations. So we've grown and we continue to be a part of the community, serving this great community that we have. And so we look forward to many, many years of continued partnership. Additionally, as we have 23 years of great service, last year we were recognized as in the Best of State, received our first Best of State award in the property management field in 2021. And we are pleased to announce today that in 2022, we received that award again. But not only did we receive the Best of State in property management, but we also received Best of State in customer service and employer relations. And so congratulations to all the hard work of our employees and for you as our customers and our business partners for putting your trust in us to help us serve your communities and make the associations the best place to live. So here we go to get into our presentation. So we have Michael Johnson, who is our CEO, will be presenting along with Luke, talking about insurance. Luke Udy, like I mentioned, is an insurance professional here in Utah. He currently holds the CIRMS designation, which is the Community Insurance Risk Management Specialist through CAI, which means he has put in the time and effort and understands insurance needs for HOAs. I will say this today, and I will continue to tell anybody who will listen, having an insurance professional that understands the uniqueness of HOAs and insurance needs of HOAs is important. Just like you go to HOA specific attorneys for certain issues, you need to go to HOA specific insurance professionals to make sure that your needs are being met. Welcome, Luke, and we look forward to hearing from you.
Awesome. Thanks for having me, Scott. It's fun to be here today.
Perfect. So with that, we will turn the time over to Michael and Luke for their presentation.
Well, thanks, team, and it's a pleasure to be with you, our fantastic studio audience again this month, and to present this month's topic on insurance and addressing water damage. And Luke will jump in as time allows or doesn't allow. Luke, just jump in whenever you want to jump in. He is, as mentioned, a fantastic local agent broker with American Family, and we're pleased to have him with us this month. He will finish up the presentation today specifically, and then I'll interrupt him. Maybe, probably not. All right, so addressing water damage in Utah. Now, Utah is a different animal. We're a little bit of a unicorn. Different than the whole rest of the country when it comes to basically how property insurance claims are handled. And we're kind of model legislation, and we're going to talk a little bit about that today and the differences between Utah, our other markets, Arizona and Idaho, and then other parts of the country. But if you're watching this, know that this is, 90% of our customer base is in Utah, and we're going to focus on Utah statutes. The difference with the way the statutes are written in Utah makes the process of an insurance claim for water damage a lot more predictable. Insurance companies really like it. Associations kind of like it. Management companies really like it. I assume insurance guys really like it, because fault doesn't matter in Utah like it does in other states. The association covers it regardless. Now, is it that cut and dried and simple? Absolutely not. Let's get into it. So when we're looking at water damage, we have to ask ourselves these questions on a national perspective. What exactly is damaged by the water? Who's responsible for the repair and the maintenance of the what? And how does it all get remedied, rectified, right? What's the how? What, who, and how? In Utah, it doesn't matter. A lot of this doesn't matter because the association is responsible after the owners with damages pay the association's master insurance policy deductible. What does this all mean? Well, let's get into the code a little bit. I'm going into the Condominium Ownership Act 57-8 in Utah, and then also the Community Association Act 57-8A Part 4 is where we find that. The language is almost identical, except we call units and lots different things. That'll pop up on the screen in a second, but it's almost the same statute. The statute requires, and this was negotiated over about 2 years with attorneys in the industry, management companies, board members, and most importantly, the insurance agents themselves. The insurance industry was an active participant in coming up with this. Coverage in a condominium setting has to be blanket coverage. Guaranteed replacement costs can't be less than 100% of the full replacement cost. We'll talk about that in more detail in just a minute. Excuse me. So lot, this is the difference between Condominium Act and these red words are what it says in the Community Association Act, right? So just a couple of changes like that. Instead of a condominium project, it's just called a project. So not anything to be too worried about. The core is the same. What is a blanket policy? Blanket policy is an insurance policy in which various items or classes of property, such as buildings and contents, are covered. What's replacement cost? Replacement cost is trading old for new. The cost of replacing property with property of like kind and equal quality or effectiveness. The statute goes on to continue saying that property insurance, now we're talking about property. Now this can be our buildings, this can be our information on a computer, that this shall include coverage for any fixture, improvement, or betterment installed at any time to a unit. So think about this. You have a condominium building and there's 100 units. And say it's a mid-rise, 10 stories, 10 units per story. And the developer built all of them the same granite countertops, the same level of plumbing fixtures and kitchen appliances. It's all the same. But over time, and maybe even at the beginning, there's an owner up on that 9th or 10th floor. He has great view of the valley, and he's all, this is my showcase. I want this to be a special unit. So now I'm going to go in and I'm going to do big upgrades. I'm going to have the finest marble countertops, top of the line kitchen appliances, top of the line surface coverings, rugs, and tiles. Okay. Look at what the statute says, that regardless of when it's installed at any time, the association property insurance coverage will cover that, even if it's different than the rest of the building. So just some of the words. Now, in the Community Association Act, it only has, this statute only deals with attached products. So think of a townhome, 6-plex or 4-plex or even a duplex. Doesn't matter. Remember, townhomes in an architectural style, it's not a legal entity. So sometimes they're condominiums, which then the Condominium Act applies. Sometimes they are non-condominiums or in the Community Association Act. So that's why it says an attached dwelling. For these statutes to go in effect, it has to be an attached dwelling. Now, can a single family detached association have these same requirements? You bet, but they would have to put them in through their CCNRs, not through the state statute. State statute doesn't mandatorily make it happen. So here's an example, right? Marble, built-in bathtubs, $100,000 fireplace mantle made from reclaimed wood. You know, you hear the jokes about a gold toilet. All these, regardless, become the association's responsibility as upgrades and fixtures inside of a unit. Bottom line is, with water damage, is that fault doesn't matter. So it used to be in the old days, and this is part of the reason we got together 13 years ago and tried to fix this. And this is how most of the rest of the country is, including Arizona and Idaho. I'm in a three stacked garden style condominium unit, 3 levels, 4 per level, 12 total units in a building. The 3rd floor has a leak. It leaks down into the 2nd floor, and then that leaks down in the 1st floor. The 1st floor and 2nd floor and say, hey, I've got a leak in my ceiling, and it's coming from my neighbor upstairs. Help. Well, the association would help them get the water turned off, but then it was between that unit owner below and the unit owner above to get it fixed. And they would have to go and file a claim against the 3rd floor's insurance possibly. And people were pointing fingers, and it is never a good situation. So fault doesn't matter. It doesn't matter if the toddler clogged the toilet full of towels and diapers and whatever, and then flushed it and just flooded. Doesn't matter if you turned off the auto stop overflow preventer on the tub. Doesn't matter if you had a bad washing machine hose connection. Doesn't matter. In Utah, it does not matter. Fault does not matter. So all attached housing then, at least since the law went into place, damages are covered by the association. Now look, that may be by insurance. Doesn't have to be by insurance. Association technically could self-insure. Highly recommend against that, but they could say, hey, we're going to gamble and we're going to set aside $250,000 into a reserve account that will pay for these kind of claims. You know, that's and there are entities, we hear of entities that self-insure. We don't recommend it for any of our association clients. Use insurance. You pay a discounted rate in case, and not really in case. It will happen, so that you can make sure that's taken care of. And meeting the deductible, there is a deductible, may be a shared responsibility. So let's look at some kind of diagrams and examples of what this looks like. So this is what I'm talking about, right? From the third floor, the leak originates in unit 3, but it's on the floor and it kind of goes through their drain, and now it's damaging that common area ceiling floor between the third and second floor. It's going down the wall, and then it's collecting in the second floor, and it's damaging a wood floor or carpets or drywall, whatever. And then it's going down. It's also causing damage on the first floor. So remember, Utah statute doesn't care. And now we have 3 different units involved. The third floor, which is where the leak originated, doesn't have much damage. Gravity has given the damage to the second and first floor. And now we're trying to simply fix the damaged property in the second and the first floor. In this example, the total damages to all 3 units is $20,000. The deductible is $10,000. So now there is going to possibly be a claim. Now, that's an interesting thing because the association can choose by the statute. It allows the association to do some review, some research, and still can maintain their insurance rights, even if they waited a few weeks to decide to file that claim. They might decide, because remember, insurance premiums increase not by the total amount of the claim, really. It's frequency of claims. And so they might decide, if this claim's only $10,000 more than our deductible, maybe we're going to pay that instead of filing a claim, taking that hit that would raise our premiums. That's a decision they can make. It's a lot easier to make if the damages are $30,000, $40,000, $250,000, and the deductible is $10,000. So then now let's look at how that breaks down. So this has taken that $20,000 in damages and said there's $5,000, or a quarter of the total damages, are in common area. In this association, the walls, the exterior walls, and that floor ceiling combined area is common area. Unit 3 actually has no damage. Unit 2 has 50% of the damage, and Unit 1 has another 5,000, or 0.25%. So the law reads that the deductible will be broken down by percentage of damage. So you take the total damages, add them all up, and then you take the total deductible and multiply it by those same percentages. So common area deductible is $2,500. The association is going to have to come up with, Unit 2 is going to have to come up with a $5,000 of that $10,000, and then Unit 1, $2,500. The HO6 policy, and you can go back and watch some of our insurance broadcasts from last year on property coverage, but the Unit 2 and Unit 1 hopefully have HO6 type policies that they're paying for, that are covering their personal belongings. Because remember, the association's not going to cover your couch and your bed and those items, or lodging in case you have to have temporary lodging because of a major claim. They're only going to cover they're only going to cover the structure, the property itself, and then you can buy that HO6 policy that will cover those other things. One of the things HO6 policy covers is paying the association's deductible. So I have a HO6 policy for my townhome. I pay about $32 a month. That gets me coverage for all my personal property that's in there. It gives me a little bit of lodging. And so I pay a $500 deductible, and my insurance pays the $5,000 portion, or the $10,000 portion, or whatever it is. And there's the information on the HO6 policy. Covers other losses like hotel stays, assists with an owner's association's deductible responsibility, and bridges the gap between the owner's deductible and their association's deductible responsibilities. So before 2012, you know, this is a HOA roof, it's leaking, and the owners are required by CC&Rs to insure their dwellings, right? So the owners are then responsible for their damages. So even though the HOA maintained and owned roof failed, and it caused all those 3 units beneath the roof to have damages, the association, and this is pre-2012, the owner is fully responsible for their own damages. So this would be 3 different claims with each of the individual unit owners' policies, and the owner would be, the owner would be responsible for that amount, but they would of course pay their deductible. They might not have insurance though. They might not have an HO6 type policy, then they'd be fully responsible. We had a case where an owner inherited some money in a condominium building about 15, 16 years ago, and they paid off their mortgage. The mortgage company said, well, you don't have to have insurance anymore on your internal policy. The association's covering the structure. And so they canceled their inside coverage, and then they had a fire event inside their unit. It had about $200,000 worth of damage. And because they didn't have insurance, they were on the hook for it. It was an ugly situation, sad situation. Now, of course, the 3 individual insurance companies could decide, all of them, like, that was the HOA's fault. They had a duty to maintain the roof and they didn't. That's why my insured got water damage in their unit. And Farmers or State Farm or American Family or whoever might say back in those days, we're going to sue the association and make them reimburse our cost. That's a common thing, still happens today where there's not the coverage. So pre-2012, any association that's older, we recommend you amend into your governing documents to opt into the current wording of the statute. Your CC&Rs might already have language that automatically makes that happen. Consult with your attorney and consult with your manager and do an amendment to make sure that whatever the current statute is, that's what you do, especially here in Utah. In Arizona and Idaho, Arizona Code 33-1253, look at it. It's common language to the rest of the country that the association will cover the structure. If we have that example where the 3rd floor, say they're purposely dumping water onto the floor that's causing damage below, the units below have to go out and work it out with the 3rd floor unit. But this highlighted part of the end talks about that the association need not include improvements and betterments installed by unit owners or the personal property of unit owners. So it specifies some things that the association doesn't have to cover. Idaho Code 55-1517, as we've talked about time and time before, Idaho Code is very brief, not deep. And so it basically is saying, look at your governing documents, see what's there to determine your coverage. So across the country, we go back to this, right? What, who, and how how do we kind of do that? And it's not a bad idea even to do this in Utah as you're creating your records of an event. The what? Compile a record of the extent of the damage. Carpet damage. Is the drywall. A lot of time the carpet can be dried, but the glues that hold the individual carpet fibers together comes undone in a water event. And so the carpet has to be replaced sometimes. Drywall. Drywall will bow, will bend, will expand. Also not good. Plus to get in the walls and dry it out, you got to cut it out. Furniture, subflooring, all those kind of things. Identify and note where the water came from. This is super important in other places because the water source may be irrelevant in determining who's responsible. It might be completely relevant. In the old days, pre-2012 in Utah, if the association sprinkler outside in the association maintained landscaping popped off, got cut, caused a geyser, filled up a window well, and the window well broke, flooding the unit, well, the association probably had some responsibility to take care of that. Different, right? If it's a shower or a washing machine or something from above. So you got to identify, where did the water come from? So who? Is it an owner or the association that is responsible for maintaining where the water damage came from? So you got to review the CC&Rs. Hopefully you have a responsibility chart. We try to do those for our clients to understand who is responsible for what. Check plat maps, other documents to clarify. Sometimes you got to understand where unit and common area begin and end. Do not assume there's, like in the walls, a lot of documents say from the drywall in is the responsibility of the owner, the homeowner. And so that means that space behind the drywall in the middle of the wall is common area. And the common area needs to be taken care of by who owns the common area. Now, remember, ownership and maintenance responsibilities don't mean the same thing, right? The association can own something and the CC&R say that I'm responsible as a homeowner to repair it or maintain it. Or it could say, it could be the reverse. The homeowner, I own my roof of my townhome unit, but the association has an obligation to maintain it. You got to read through those documents, look through responsibility charts. The how, considering negligence, and this is what in the old days, everyone's looking to blame the other or to come down to the sources who ultimately is responsible. There's 4 elements to prove potential negligence. Who had the duty to maintain and repair? Was there a breach? Did they do something wrong? Did the breach cause my damage? And what exactly are the damages? So just because a sprinkler head breaks outside in the common area and floods my unit, if the association didn't know about it, no one had ever called about it, then association maybe is not negligent. It's just a maintenance issue. Unfortunate, horrible, but there might not be any negligence there. When we're talking about how, we also got to think about insurance. And that's what Luke's going to talk about at the end today, is consider insurance. Your CC&Rs, the agents are still going to look through your documents. They know the state statutes for the state where they're selling the policy, and they can write policies that meet your CC&Rs, your governing documents, and the state's federal statutes. Example, your CC&Rs may require the owner to maintain and repair the drywall, but the CC&Rs or state statute may require the association to insure that component. Just remember Utah, happy unicorn, things are different, easier, I would say. Now, what is management? What is our responsibility as management when it comes to water claims and insurance? Community managers advise the board in implementing financial responsibility of selecting and purchasing insurance. Management can provide emergency response. Remember, the priorities are health and safety and property values. So when we get a call about water damage, we don't care about any of that. We want to get someone out there to stop the damage. Homeowners actually, under their insurance policies, have an obligation to minimize the damage, to protect the insurance companies. You don't want to look and say, oh, there's water coming from the ceiling. man, I really would like some new drywall, some new flooring. So I'm just going to let this happen for a day before I contact the management or the association. Okay. You have a duty, association, everyone, to health and safety, protect the property values, and management provides a 24/7 emergency option and gets a hold of the board members. Also, most of our contracts for most management companies gives us some emergency powers. We don't even have to get a hold of anybody. We can just get it taken care of. Be proactive, right? What can you do before damage occurs? Understand, how many times have we said this already in the last 15 minutes? Review and understand the governing documents. Review the insurance policy and understand your coverage. The fine print of your insurance policy should be available in your owner portal, and you can go there and you can read those pages and understand it. Be proactive. And in your individual HO6 policy, also, we won't have a copy of that. You have a copy of that. Know, read, understand. Be proactive. Develop maintenance charts and plans. Develop an insurance chart. Adopt a water leak policy, especially if you're in a stacked building or attached buildings where one unit can leak into another. What is the policy? How's that handled? Consider any amendments to address water leak liability. So for insurance, insurance is simply a risk management tool. And it's the process, risk management is a process of making and carrying out decisions that will minimize the adverse effects of accidental losses upon the association. When you're reviewing the policy, who's insured, what's the time period of the insurance, what's insured exactly, what's a covered cause of loss or peril insured against, what's excluded, and what is limited. Our recommendations for insurance is you got to know about, now water damage and flood insurance coverage are different types of beast. And so we could probably have a whole hour where we talk about that. And here in a second, we're going to jump into Luke's presentation. I'd like him to talk a little bit about the difference between flood insurance and regular liability insurance. And water damage, sometimes water damage is not clear, sometimes it's brown, and that's sewer, and that causes a whole nother realm of problems, and it is the worst thing ever. You know, how much of that is covered in these policies? So I'm going to go ahead now and stop my presentation here. And I'm going to pull up Luke's. And Luke, are you there with us, my friend?
I sure am. Thanks for having me. It's good to be with you today.
We're glad to have you. So, okay, well, I'd be really cool if I had it super ready to open, but only kind of ready to open. So, once again, my friends, let me turn it over here to apparently this is the first time I've ever done this, Luke. Okay, there we go. I think everyone's seen your slides. And Luke, tell us a little bit maybe about yourself and about our topic today. Thanks for joining us, by the way.
You're very welcome. Thanks for having me. Yeah, excited to be here. Some people like talking about football. Some people like talking about other things. I like talking about insurance. It's what I do.
It's sexy. It's sexy, Luke.
Well, I didn't want to bring that up, but thank you.
You're welcome.
So I've been in the industry for 13 years. I specialize in risk management to homeowners associations and condo associations. And my agency has some really good experience in this regard. So I'm excited to be able to talk about some water damage today. But I'm married and have 5 kids. And although we do make insurance sexy, I love football and lacrosse. I'm actually an assistant high school lacrosse coach. My 16-year-old is a very good lacrosse player, and we enjoy that. And a lot of people think I ride the bandwagon of the Rams, but no, I've been a Rams fan since I was a little boy, since Jim Everett and Eric Dickerson were on the team. So pretty excited that my Rams.
Merlin Olsen, of course, back in the day, right?
Well, naturally, but that was slightly before my time. But I know exactly who he is.
No, you just have good skin.
There you go. But again, thanks for having me. Excited to talk about water damage. The thing about water damage is, let's say I get 10 claims into my office. 9 of them are going to be water damage. When I say claims, I'm talking about any type of dwelling. Fires happen occasionally. You have wind occasionally, but the vast majority of water damage, and the majority of them could probably be avoided if we did, like Michael talked about earlier, be more proactive. But most of us are busy. We have our life, and we just kind of forget about our water heater and forget that it's only going to last 12 years and it's on its last leg. And again, there isn't some motion detector on it, or you don't get an app to your phone saying, hey, your water heater is about to explode. All of a sudden you find out when you can't come home from work. It happens to you in the middle of the night. But water heaters are such a common water peril. It happens all the time, and we just have to realize that just like anything, they will go. So our recommendation is to replace them about every 12 years, 10 years. But if you start seeing a rust on them, that's kind of a sign it's ready to go. Water happens all the time, and a lot of times from your washing machine, your refrigerator, your ice machines, a lot of times it's because it was installed improperly. So make sure you install those properly when you move into your house. Check them occasionally, but they always start out with a small leak, and it could be leaking for weeks. And so it's tough because I don't look behind my refrigerator. I don't look behind my washing machine. I should, but those are just the things we have to watch out for. But small leaks become big leaks if they aren't fixed.
And Luke, people always say, but I have a little drain next to my water heater. If it has a problem, that's going to catch it.
It might catch a little bit of the water, but like you said before, it follows gravity. It follows the path of least resistance. Over time, your slab or your basement, it settles. So water will not go in. Maybe you'll catch a little bit into that drain, but most of it's not going to.
And time again, folks, I've gone into units that have had this kind of a water problem, and literally the whole bottom pan rusted out, fell at the same time, and all 35 gallons or 50 gallons of that water all comes out at the same time. No 2-inch pipe that's 30 years old or even 12 years old is going to catch it.
Exactly. The other thing is toilets. Toilets happen all the time. A lot of times it's just because children, whoever, plumbing systems do not like these flushable wipes that are used today. They get caught. It's a good practice not to use them, or at least to flush them down the toilet. It's not a good practice. Roofs and gutters, make sure this is a good practice to annually, usually around fall when the leaves are falling. I've seen so many leaves fall into gutters, downspouts. They get obstructed by debris, and then the water gets trapped, and then it has nowhere to go, and it eventually comes into it saturates into your home, and then you'll see water going on your walls, and it makes a huge mess. So roofs and gutters cleaned regularly is a wise idea. Another one is sprinkler system. Make sure your sprinklers are pointed away from your foundation and basements. I cannot tell you how many times basements have flooded, window wells have filled up, just merely because the sprinklers were pointed in the wrong direction. So be cognizant of that. Here's a scary one. This is was an epidemic. It still is today. Polybutylene pipes. A lot of people just call them poly pipes, but they back in the day, they thought this was a smart idea. They might as well just use plastic straws for their plumbing system. but it's just a great pipe in color. And if you have it in your home, it's just a matter of time. It's going to break. It's going to bust. It gets brittle, and we'll talk about some solutions for polybutylene pipes here shortly. But if you have them, like I said, they're gray in color. They're usually stamped with the code PB2110. And so that's a dead giveaway. But if you have polybutylene pipes, just know it's a matter of time before they're going to bust. And we'll talk about some solutions here in a second.
Not if, but when with that.
Exactly. So we have some best solutions to talk about. We've been talking about the negative part of it. Let's talk about some of the positives. So the easiest solution that I can come up with, and it's free. All it takes is you take 1 minute to walk to your basement or into your utility room, turn your water off if you're going to leave for more than a day. All you have to do is go downstairs by your water heater, pull the angle lever to 90-degree position, and it turns the water off. You can't have a water heater burst while you're gone if the water is turned off to it. So that's an easy solution right there. Another one that should be done is have your home inspected annually. If it's inspected every 3 years, if it's built within the last 10 years, or annually after 10. Yes, it's going to cost you money, 100%. It might cost you $200 or $300 to have an inspector come and look at your house, but think about it as an investment. Instead of having to pay your $1,000 deductible and have the headache of, especially right now, I mean, I talk to so many contractors and they can't get this in and they can't get the carpet in. They're so behind. So if you have a claim today where in 2 years ago it might have taken 10 days, 2 weeks to mitigate and reconstruct, it's going to take double or triple that right now. So rather than have to pay your $1,000 deductible, have a claim on your insurance record and go through the headache of everything, just have a home inspector come. And again, we'll talk about this more in a minute, but if you have this home inspector come and do everybody's in the association, he'll give you more than likely a bulk discount.
Love it. Well, and I know we have some associations that are proactive and arrange that for their owners or look at their common areas, but not near enough.
Another best solution, and this is one thing I'm emphasizing greatly to all my associations, is to raise the master property deductible to $25,000 or $50,000. Think about it. Let's say you have 3 years ago, you had a $10,000 deductible. Well, yes, 3 years ago's $10,000 is now $50,000. I mean, think about how much the cost of construction has increased in the last couple of years. So, but having a higher deductible, will number one, lower your premiums, and who doesn't like lower premiums? I know that's a given, but also it reduces frivolous claims. So let's say, for example, Michael did a really good job of explaining us to deductibles earlier, but let's say you have a $50,000 master deductible. Well, anything below that $50,000 will be on your HO6 policy. So from an association standpoint, if the average claim, for example, is $35,000 and you have a $50,000 master deductible, well, your association will never have a claim. You're actually avoiding claims on the master policy, and you're really ensuring better rates for the future by having a higher deductible.
Yeah, that we've had several associations from the beginning that are just built or old and have a lot of water leak history. You know, they had to start off at $50,000 deductibles. I mean, they just couldn't afford insurance any other way. Our association clients, you need to be aware that your CCNRs might require you not to have a deductible above 10,000 or 25,000. So know what your documents say. You might have to do an amendment to do that. We generally try to advise the attorneys to not to put in locked amounts, let the boards make those decisions over time. But look at those documents. You might be handcuffed a little bit by what they currently say. The other thing, Lucas, I'm wondering, does my HO6 policy for my townhome, is my premium going to increase a little bit if they know they have to cover up to 50,000? Are they going to look at the master association policy into deductible and then say we have more? It's not 10,000 we're on the hook for possibly here. It's up to 50,000. Am I going to have to pay more for my personal premium? And if I do, is it really going to be that much?
Yeah, really, really good question, because I get that question all the time. Okay, the HOA is having this $50,000 deductible, but yes, the state statute says you have to give the unit owners 30 days to call their personal insurance agent, which is smart. So I call my American Family Insurance agent, say, hey, they just raised my deductible from $10,000 to $50,000. I need to increase my HO6 coverage by $40,000. So yes, just like anything, raising your HO6 dwelling coverage is going to increase, but it's less than you think. It's really, it's not going to break the bank. It might be $4 or $5 a month. It's it's nothing that I feel, 4 or 5 days, especially on $4 or $5 on a fixed income can be a lot, but it's not as much as you think. But also it's a good time to meet with your insurance agent and review your coverages anyway.
And if I have my autos and my HO6 with the same agent, I'm generally going to get a multi-policy discount that would offset any of that anyways.
That is 100% correct. And then insurance reviews always reveal extra discounts and savings you weren't getting before.
If I turn in my report card, can I get a little better rate on my HO6 policy? Just kidding.
Yeah, no, your kids can on your auto policy. Other best solutions: create a plan or budget as an association to do these following things. I know an association that just voted to have all their polybutylene pipes replaced. So they did a special assessment, had the same plumber, came in that gave him a screaming deal, and it really helps their future rates, because they got to a point where they couldn't have any more claims, or they would literally be uninsurable. And if you are uninsurable, then you, as an insurance agent, I have to take you to the secondary market, and your rates will double or triple. So it's very important to do these plans, create a plan or a budget. Replace water heaters. We talked about this earlier. Replace roofs, clean gutters. These are a few of the things you can do, but you have to meet together as a board and as unit owners to create these plans. Somebody has to take the initiative to do it, or it won't get done, but it's very wise to do it. And of course, the association will get bulk rates by complete them all at once.
And that's a big thing, right? We talk about it's slow and hard to get one water heater replaced, because you're competing against a developer who's building 100 homes and needs 100 water heaters put in all at once. Well, use your association size, do it all at once, and you're now 100 water heaters. So you're going to get the attention of that contractor that you probably wouldn't have, yet alone the discounts you're going to get.
Exactly, Michael. The biggest thing, and Michael talked about it earlier, was just being proactive. You have to be ready. So if a water heater bursts and you're home, and you can have a reputable flood restoration come over and take care of it, you can get it cleaned up for $1,000 to $2,000, $3,000. It's not that much. The issue we run into a lot of times is the people that aren't home. It could sit overnight and go from a $2,000 claim to a $15,000 claim. The largest claim I ever had when it came to water damage was somebody that was a second home, They didn't have anybody checking on their home ever. And that's one thing you have to do is if you have a second home, people that are going on vacation, somebody needs to be checking on their home a couple times a week. The water damage sat there for 3 weeks until they got home. $350,000 of damage was the bill.
Wow. Was there every bit of drywall, every bit of flooring, that's cabinets on the floor by then. Yeah.
Yeah. You name it. Anything that was saturated had to be replaced. But if we had caught it within an hour or 2 or 3, all that is you just dry it.
Yeah.
And it's a smaller claim. So being proactive, coming up with a plan, partnering with your management company and your board can save you money in the future, time and headache, and having to deal with your insurance agent like me.
Yeah. Well, which isn't a bad thing, of course.
Well,
but
it's too bad this isn't TV because I mean, you can't see that we're eye candy, Michael.
yeah, well, basically that's true. So one thing, I'm one of those St. George second homeowners who doesn't turn off my water in between visits because the pool pump, the autofill needs it on, and guests come, and I just don't want to deal with it. But I was able to put on sensors in my water lines that work through the Wi-Fi. And if the water starts going out at an unusual clip, then I get notified. And those are very inexpensive, great preventative maintenance. We should probably find some links and tell people about those too. But good stuff all around. Well, Luke, do you want to stick around for a few more minutes and answer a couple questions?
Happy to answer anybody's questions.
All right, I'm going to turn time back over to our education team, and they will lead us through some Q&A here for the next little bit.
Thank you, Michael. Thank you for that. Luke, thanks for giving us a lot of great information. We had a couple of questions that came up while we were presenting, but I think they've since dropped their hand. If you have a question, hit the raise your hand function, and then we will move through it and try to answer your question as much as possible. Looks like Eric has raised his hand, and so Eric.
Yes, I have 2 questions. The first one is about wind damage. We live out here in Hurricane, of course, and we've got block walls and other common areas, but just in general, wind damage. And the second question, because you cover Utah and other states, what about earthquake damage?
Yeah, Luke, you want to handle both of those?
Yeah, sure. Wind damage is always a covered peril. Wind damage is again, you have to figure out if I have 15 shingles blow off, that's probably not worth filing a claim. But if your whole roof blew off, so yes, wind is covered by your policy. Now, the majority of Southern Utah condo associations have tile roofs, and usually tile roofs don't blow off as easy as asphalt. But yes, asphalt is a covered peril, and it's covered automatically by your policy. There's no endorsement that needs to be added. Earthquake is a different situation though. Earthquake, and again, the vast majority of HOAs don't get earthquake insurance because of the cost. But the cost in Utah is so significantly less than if you were in California or a state like that. So earthquake is not covered by the basic policy. However, it is something that's easily added, and something like that can be quoted by your insurance agent. They can give you the cost for the coverage, and then you can take it to your board and vote to see if that's something you want to add.
Interestingly enough, a lot of associations in northern Utah had earthquake coverage because it was kind of a throw-in policy for some insurance providers. But as Luke mentioned, over time, the earthquake coverage became kind of more expensive. And so as associations were evaluating their budgets, and in particular their insurance line items and assessing the risk, they decided that earthquake coverage was not important. And so they dropped it all And then shortly after COVID started, Northern Utah got hit with an earthquake. And so when they thought it wasn't important, it then became important. And so that is something that associations are starting to reevaluate and bring on. But talk to your insurance provider and get a quote for it. And then you'll have to determine whether or not that is cost effective for your association. Did that answer your question, Eric?
Yes, thank you.
Perfect. Other questions? Luke, just as a matter of practice, I know you and I have talked about this a couple times while we wait for other people that may or may not have a question. But HOAs particularly, while when they get their insurance, and me as a manager, when I get an insurance, it's kind of like taking my car to the mechanic. I get my policy and they say, here's the policy that I need. And I say, okay, great. And that's as much thought as we put into it. I know you and I have talked about annual reviews, looking at those policies, making sure that those meet the needs of the association. Can you talk a little bit about what that process would look like for anybody that wants to evaluate their policy on an annual basis?
Yeah, my pleasure. And Michael touched on this well in the presentation. But for example, if your vehicle needs to get fixed, you take it to a mechanic. But if you have a bus that needs fixed, you don't take it to the same mechanic. You probably take it to a bus mechanic. Insurance is much the same. It's such a unique policy that you could have the best agent in the world that does home and auto insurance, just the most fabulous agent in the world, and he comes highly recommended, but he may not know how to read a policy for an HOA. So you have to find an agent that knows the ins and outs of HOA insurance. So the best thing you can do is have that policy on an annual basis reviewed, because there's so many coverages that you don't think about. Most people think about general liability and they think about the property damage, but they don't think about what happens if my 1968 condo association burns down and you don't have enough coverage to build it back to code. Crime coverage, directors and officers having monetary and non-monetary coverage. So having that reviewed annually by an insurance agent that specializes in HOA insurance is priceless, because we don't want anybody to be caught in a lurch without the proper coverages for your association. And that's something that even if I don't insure you, I am happy to look at your policy, and then you can go back to your insurance agent and ask for those coverages to be added.
Because the worst thing that we want to do is put associations at a risk where they're like, hey, we have this huge claim and we don't have the appropriate coverage. We were involved in a claim where the insurance capped out at $50,000 for a sewer claim, but it involved 12 units. So as you touched on in the presentation, that $50,000 went away super quick, and then the association had to make up the difference. And so evaluating your policies, making sure your limits are appropriate for what the market dictates, is an essential piece to the risk management and making sure that your associations are properly covered.
You're exactly right. And the one thing you have to look for right now, and this is on most people's minds because it's obvious here in Utah, is I see so many associations that are insured for $100 a square foot, $105 a square foot. But does anybody know what it costs right now to rebuild a home?
About $270.
Yeah. So you're 50%. If that's the case, you're so vastly underinsured. So that's something to look at as well, because we want to make sure that if something, heaven forbid, does happen, and there's a fire and a total loss, we want to make sure that you can rebuild it back to the way it is today.
Absolutely. All right, we got a couple more questions. So we have looks like we have a community manager. Go ahead.
Hi, this is Nicole over at SDS Draper, and my, I guess, main concern, at least so far, I've only dealt with water damage and things that are small and below the deductible. So obviously we spend a lot of time going over what happens when you do meet the deductible, but how are things different when you don't meet the deductible?
So if you get a call and there is a water loss, the first question is, the first advice to anybody is that they have the responsibility to mitigate the damages like Michael mentioned. They have to take care of whatever that leak is. And if they say there is a loss, ask them if they have an estimate for what the damages cost. If they say no, and then you can explain to them, hey, whatever the association's deductible, where that loss is, say, hey, we're happy to help you out as soon as it meets the deductible. Until then, kind of handle things on your own. If you have an estimate that shows that it's going to go past the association's deductible, we're happy to take a look at that and forward that on to our insurance provider. Or if it's just barely over the association's deductible, the association may choose to self-insure that cost, but push the responsibility back to the owner.
Understood. And what would be, obviously it's going to depend upon the severity of the damage, but what would be a reasonable amount of time to expect an owner to get that addressed?
As soon as they, typically if they're calling you, it's happened within the last couple days, but sometimes I know we got one that happened 6 months later that was like, hey, we had this claim, now pay us some money. And we're like, and so really the statute of limitations, reasonability kind of goes out the window when you have statute of limitations. Like you still have to cover that claim with, as long as it's within the statute of limitations, but try to get that information as fast as possible.
And I'd also like to add to that is every community manager, every company, even every board, everybody needs to have a reputable flood and fire restoration company on hand. Because what a lot of times is there'll be a little toilet leak, and a company that's had been vetted and not as reputable as you hope goes in there and just starts ripping everything out, and they rip drywall out the floor. Next thing you know, a $1,000 or $2,000 just dry job with 15 fans could come in there and dry it up, and they now have turned a $2,000 claim into a $20,000 claim, and that could have been avoided by just having a reputable company go in and mitigate that. So have one on call, somebody that you trust that can go in there and have the best interest of the association in mind.
Thank you. Great question. All right. Looks like we have a question from Susan Meyer. Hopefully I didn't slaughter your name too bad here.
Can you hear me?
We can. Susan, go ahead.
This is Susan Meyer, and I live in Park City. We have a problem with ice dams. We have some homeowners that do not want to install heat tape, and they definitely need it. Can you address those problems and how we can resolve some of the problems that we have?
So a couple of questions. So depending on if it's common area, if they're attached products and the HOA maintains the outside and owns the outside of the unit, then you may have a little bit more flexibility as far as an association goes, of the association footing the bill for the heat tape, installing heat tape and monitoring the heat tape to try to limit those risks. If it is private property, then you're kind of limited there as far as options. But having a policy and passing a policy about how and when and how that all works, the association can certainly talk through and try to get that taken care of, because ice damming is multiple issues, right? Like if the ice dams up and leaks into the roof, then you have interior damage, not to mention just ice on the exterior of the unit, slip and fall coverage there. Luke, do you want to add anything there?
You know what I did?
Go ahead.
Oh, I'm sorry. You know what I wanted to know if, oh, how do I word it? Maybe you go ahead with what you were going to say, and then I will follow up. Okay.
Perfect.
Yeah, I really, Scott, you basically said what I would have said, but obviously it needs to be taken care of, or I've seen major slip and falls before, and nobody wants to be caught up in a general liability claim with the court system and everything. But I've seen, just like you mentioned, I've seen HOAs come up with an amend their CCNRs to take care of that. So that's what I would look into for sure. But if it does, obviously it's covered by the policy. So if it somehow did leak into the home, it's considered water damage and would be a covered peril. But obviously we want to avoid that. And that's what you're trying to get at, Susan.
Yes, so you know what, we install the roofs, but we have said that the owner is responsible for maintaining them. Is that a correct policy? Is that what we should be saying to our
You know,
owners?
the association can choose to take on more obligation. It's just an additional risk or risk management, similar to cleaning out dryer vents. Typically, dryer vents are the owner's responsibility to make sure that they are clear. But Luke, you may have to correct me if I'm wrong. 70% of all house fires start from the dryer vent or some, exaggerated amount. So a lot of associations choose, as risk management, choose to pay to have the dryer vents cleaned out just as a service for their residents. Similarly, here with your heat tape, or the association can choose, particularly if they're attached buildings, to install heat tape and monitor that heat tape as a risk management tool. But there's a cost associated with it. And so you have to make sure to figure out if that works for your association. But that is one option that the association pays to have that done. And then it's a common expense to everybody. The electricity is a common expense to everybody, and everybody else is taking on that additional risk.
Okay, well, thank you. Thank you for that information.
Absolutely. All right. Thank you, Susan. All right, we got another question here. I apologize. I don't. Go ahead.
Hello.
Yes.
Oh, yes. So I had a question. We've discussed that on water, the fault, whose fault it is, doesn't matter. I just wanted to clarify, if the water is coming in, like outside water, we talked about damage with pipes breaking or, toilets overflowing or whatever. But if it's outside water that has come in, like from a major rainstorm, does that follow suit the same way with the claim? Does that make a difference?
Yeah, outside water is one of the hardest things to talk about, because 99% of the time outside water, unless it's part of the plumbing system of the home, is not covered by a policy without purchasing flood insurance. So whether it be from a torrent of water, rainwater, a flood, a river, a creek, whatever the case may be, outside water is not covered by the basic policy unless you purchase flood insurance. And most condo associations and HOAs don't purchase flood insurance unless it's in a flood zone. So that's, again, like earthquake, that's something you can add to your policies separately, but a lot of people don't, because they just don't ever think it's going to happen to them.
So if it was rain water that came into one particular unit, it would be that unit owner's responsibility, or would it be the association's responsibility?
It depends on how the water enters the unit. If it comes through the roof, then it'd be the association's responsibility. If it comes across the ground, like you have 2 inches of water in 15 minutes, and then it comes through the door, that would be flood coverage. And so it really depends on how it comes in, and then depending on how it gets into the unit, then the different policies would take over from there and govern how that happens.
Okay, so if it was, guys, go ahead.
So I always tell people, if you're going to flood, make sure it comes through your roof. But obviously you can't help that.
Right. Okay, so basically water, if just one unit, which really wouldn't be considered flood, but it is outside water, that would be the unit owner's responsibility?
Let's hear. So let me make sure I understand your question. So let's assume that water comes in, you have a rainstorm, water comes into the unit. Under insurance terms, that is considered a flood, and so it wouldn't be covered under the HOA's policy. The damage to the unit itself would then fall into the HOA, and then, well, the owner and then the HOA would pick up the damage from them. But like as far as flood per se, I think you wouldn't have coverage there. Did I get that right, Luke?
So yeah,
He's shaking his head yes.
Flood is one of the toughest ones to talk about because it's not covered by your HO6 policy unless you have some flood coverage, which most people don't for a townhome or condo. And it's not covered by the HOA's master policy. So it's kind of one of those gaps in coverage. And it's just a lot of times it breaks my heart to tell them that there's no coverage, but it's just the reality of it. So if you're in a situation where you aren't in a flood zone, but you think it could happen to you, it's not a bad idea to get a quote from your insurance agent for that, to just because you just never know, especially if it's on your mind.
Okay.
Looks like I answered your question wrong. So I apologize. Luke, trust Luke. He's a professional.
Okay. Thank you.
All right. It looks like we have another question from John. Let's get John up here. John, go ahead.
Yes, our building had a water damage a year or two ago. What happened was there was a fire in the incinerator. It touched off the sprinkler system, obviously, and the sprinkler system did more than we needed it to do. It flooded one of the storage floors below ground and caused quite a bit of damage. Now then, you've talked about being proactive and testing systems and looking for rust colors and this, that, and the other. We don't think we can afford to hire engineers that are skilled enough to do preventative maintenance that we would need. What do we do? What does an association do in that case?
Having a policy in place of maintenance, a routine maintenance schedule in place to look at some of these systems, right? Like every time we buy a HVAC system for individual homes, it's recommended to be tuned up every single year. Most of us don't do it because we're like, hey, as long as it works, it's okay. I'm not spending more money on it. But then it never fails. The hottest day of the year, your HVAC system dies, and then you're like, oh, great. Hey, what am I supposed to do now? And then you're waiting 2 weeks because everybody else's HVAC system dies too. So putting together a preventative maintenance plan is just money. It's like resurfacing your roads. It extends the life of whatever that asset is. And so it is upfront, it is cost prohibitive to say, hey, we need to do all of these things to hire to look at this. But your reserve study is a great tool to tell you how long some of these elements are supposed to last. And so you can work with some business providers, service providers to get manufactured recommendations on some of these systems on how often they should be serviced, and schedule that into your operating budget and your reserve budget to make sure that you're extending these out. And you may catch a lot of this, but you may not. And so that's kind of how it goes. You're doing your best to manage the risks that are there. And so you're putting your best foot forward, and sometimes you'll catch it, sometimes you won't. What you're hoping to get is you're catching those things that are going to break prematurely 9 times out of 10. But working with many trusted service providers and having a routine maintenance plan are your best bet to try to avoid some of those things.
How confident should we be that our maintenance personnel can do that kind of preventative maintenance, or we need to go outside, as you suggest?
It really depends. With not knowing on-site personnel, personally, it really depends if they have the skill set and they have the background, if they're HVAC certified, if they're plumbing certified, and they have all the certifications, you can have relative confidence with them. If they don't have those sort of things, it doesn't mean that they're bad people. It doesn't mean that they're not skilled and can fix some of this stuff or have good ideas. Whether or not you want to put confidence in that or not is really, it's another risk management tool. If it's never a bad idea to consult with somebody else outside and get a second opinion. So if you have an actual HVAC company for chillers, boilers, or whoever, contact them and have them run through it. Similar to Luke, doing an annual review of your insurance policy. A lot of these people will come in. You may have to pay them a small fee to assess the system, but they're happy to have that business relationship, because the thought process for them is, if I build a relationship where I'm doing routine maintenance, when it actually breaks, they're going to come to me to get that element replaced or that amenity replaced. And so I built in that relationship.
Last question, how does a person become certified to perform that kind of inspection?
Depending on what it is, there's classes provided by the industry professionals. If you're a plumber, you have to go through the journeyman program. If you're an electrician, a journeyman program. HVAC has certain trade school certifications. Whatever the industry, professional industry that kind of governs that element will provide certain certifications similar to CAI for HOA management, and does the CERMS designation that Luke received, and the PCAM and the CAI, CMCA that I myself have received through those different organizations.
Thank you very much.
And
Yep.
I'd like to add one thing real quick, is if you have a sprinklers in your townhomes or condo associations, you can receive a discount. So ask your insurance provider if they provide a discount for having that. And then, but by getting that discount, usually they require you to have it certified and re-inspected every 1 to 3 years. So take that in consideration. So you may be missing out on that discount. They may not even know you have that. So just want to point that out.
Thank you.
You're welcome.
Perfect. Thank you. Great questions. Thank you, Luke, for your presentation, for being there. Luke, again, I'll plug Luke. He's a great insurance professional in the HOA industry. He's happy to consult with you, answer all your questions, super knowledgeable. We will see you all next month on May 25th. When we're talking about resolutions that are essential for your HOA management. And with that, we thank you, and we'll let you get back on with your day. Thank you.
Thanks. Have a great day.